The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, for the most part, as we wrapped up Tuesday's trade action, grains and oilseeds found some green on the screen. Wheat, soybeans, a decent day overall. Corn a little higher. We look over at the cattle and hog complex, though, trading a bit lower as we are pushing towards the Thanksgiving holiday. Let's talk about what's going on in the marketplace. Joining us now for analysis, Tyler Schau with agmarket.net. Tyler, great to catch up with you again, and hope all is well for you in North Dakota. How's things going?
Things are going pretty good. You know, we caught some snow 3 or 4 weeks ago, and before that it was a little rainy, and it rained a little bit after that, and so it was pretty slow going for the last several weeks for farmers, ranchers. Pens have been sloppy, cornfields have been pretty mushy. But we had a good week of drying there last week. A lot of farmers are back out there trying to get the last or the tail end of corn harvest wrapped up. And so hopefully we get a couple more weeks like this before winter really sets in.
Yeah, that's a good point. I know corn harvest nationwide, we got about 7% remaining. So we're right there. We're right at the finish line in terms of putting a bow on 2023 harvest, and that's a good thing as we're entering the holiday season. And we know, especially this week, I mentioned this a couple of times, Tyler. Thanksgiving always feels like a weird week to me in the trade because you got Thursday, markets are closed. You come back Friday with a half day. Options expirations there. You and I were talking about that before we went live as well. I mean, it's just kind of an interesting week that can lend itself to some volatility one way or another, can it, Tyler?
Yeah, you know, it's one of those weeks where if there's no real news story, it's a really boring week. And like I said, we don't have any trade Thursday. We also don't have an overnight Wednesday night or Thursday night. So, you know, you take 2 nights out of the week, you take a day out. You have a lot of people take the whole week off, whether that's, you know, guys sitting at a trading desk at a CTA or a money manager's office, just some brokers taking some time off, some farmers taking some time off. So you really have a pretty lower volume trade for the most part. As a result, it's just kind of feels blah at times. But then when some news story comes in and sparks the market one way or the other, a lot of times you'll see it make really big volatile jumps. And I think, you know, you kind of alluded to soybeans. You know, overnight the model runs on Brazilian weather or South American weather weren't exactly bullish, and we came in this morning, shot up about 20 cents right off the get-go after the little mid-morning break. And then just slowly gave it all back throughout the day. So that's just kind of reminiscent of what this week can do sometimes is when there's not a lot of volume, you can push the scales pretty quickly. And then, you know, if the news story or whatever sparked it doesn't have a lot of legs, it'll just kind of slowly give it back.
Yeah. And I think it's a good reminder to not get caught up in the day-to-day moves, but have that broader, wider marketing plan. Because to your point, a lot of farmers, they're not focused on marketing. They're either wrapping up harvest or they're thinking about Thanksgiving dinner, not necessarily watching to see if quarter beans rally 20 cents or 30 cents or whatever the case is. So try not to get caught up in that day-to-day and just making sure that you have a sound marketing plan. I think overall, and in weeks like this is an important thing to remember, isn't it?
Yes, it is. And then, you know, speaking of a marketing plan and option expiration, that's a lot of
Yeah.
December options going to come off Friday. A lot of people have been using that December option for corn protection or corn hedges, really for the last, probably 6 to 8 months. So, you do want to be having a conversation with your broker about how you want to handle those. If you do got some put coverage on, or if you sold some grain and bought calls to try to retain some ownership on the upside on the board. That you've really only got tomorrow and Friday now to get moved around with those positions. So want to be checking your statements, want to be reaching out to your broker if you do have some of those December option positions on, figuring out how you want to manage that going forward. I'm not going to lie. The conversation I've been having with customers is, I don't want to say it's not an easy one. It's just sometimes the market, has got a really well-determined direction that it's heading. And this has just been a range-bound market really for the last 3 months. And it's tough to talk about customers, rolling those puts out and paying another 10 to 15 cents. But you've got to determine where your risk is, and that's just one of those discussions that every operation is going to have a different answer for.
Mm-hmm. That's a great point you bring up, because I haven't looked at the open interest, but I know there's typically quite a bit of volume and open interest at these December options, to your point. And so I think it begs the question of, and it's kind of this broader question I think a lot of folks have been having here and trying to answer the last couple of months is, okay, if we roll out some of these December puts and go to say March or something like that, and make some of these moves in the market, will we be better off just selling it instead of storing it, and things like that, or whatever the case is. There's, to your point, I guess what I'm trying to say is there's a lot of different things that you need to take into account, especially in this corn market right now that's just been sluggish and really doesn't have a lot of upside, potential feeling to it right now, Tyler.
Yeah, one of the things we've been trying to really get out there to our customer base, and we'd encourage anyone to go take a look at it. Our partner is JSA, John Stewart and Associates, very well known for their commercial hedging program. They work with a lot of the commercials, ethanol producers, so on and so forth. And there's some really sharp guys out there, put together a lot of really good content, and then do a very good job of visualizing that data. And last Friday, Brian Burke and Kevin Clausen put out a video that I believe is free for anyone to go and watch. But it was taking a look at the commitment of traders, and really, we spent a lot of time talking about the commitment of traders and the managed money crowd. What their focus was the commercial crowd, and the moral of that story is the commercial position in the corn market, anyhow. Typically, they will be short a lot of grain. If they're buying grain from farmers, as soon as they take ownership, they're going to be shorting the board to cover their risk, because their job is to make money on the margin, right? And what we're seeing right now is very similar to late 2013, early 2014, when we come off of very high prices. The farmer for the previous 2 or 3 years was very willing sellers, right? Prices were good. They were making scale up sales into that market. But then all of a sudden the market started to fall and farmers kind of just quit selling. And you can really see that when you take that data and break it down on a month by month basis over the last 14 or 15 years, coming off of that high there in 2013 and going into 2014, the commercial position was, it was still net short, but instead of being short 500,000 contracts or several 100,000 contracts, it was short 40-some thousand contracts. We're in that same boat right now in 2023 going into 2024. The short position by the commercial is much lower than what it typically would be in a market where farmers were willing sellers. And we've been saying this a long time. The farmers have put the stuff in the bin and they've locked the doors. They've had a couple pretty good years. They probably aren't real cash strapped, and they really want this price to go back higher. And it's tricky here, because one of the things we think will happen is you'll probably see in some areas some basis push. We'll probably see basis improve as the commercials pry that grain out of the farmer's hands. But as soon as those bin doors open, you do not want to be the last farmer with a bin full of corn. I can promise you that. So that's a discussion you need to be having. You need to be kind of coming up with a plan as to how you're going to attack this thing. I know farmers don't they don't like it when I say this, but 2.2 billion bushel carryout on corn is not bullish and does not tell me we need $5 plus cash corn going out for the next year.
We are having a discussion today with Tyler Schau from agmarket.net. Tyler, soybean market it has a little more of a bullish story to it, obviously, with South American weather and some of the concerns there and more. What are your thoughts? Is it, a, I'd have to think it's a different conversation than corn right now in terms of what you're doing with marketing in soybeans. What's your thoughts over on the soybean side?
So yeah, with corn, the conversations I have with customers is I like playing the short side, being an aggressive seller, managing the risk with some short-term call options. The soybean side, I'm a little bit different. For the most part, we were pretty aggressive selling, 2023 beans. We don't carry a lot of soybeans past December, especially up here in North Dakota. Anyone who has been sold out of beans, we've been looking at some March call spread strategies to re-own that beans just on that South American weather story, or I've been going out and buying some January call options to kind of try to pick up some value if it does stay dry in South America. As far as new crop marketing, we've been doing some put spreads, selling some calls up above it, just trying to keep the premium low. But we've been going out and trying to protect some of these key levels, like 1240 against November 24 is kind of a key level for us. We've come down to that level a few times. We're afraid if we violate that 1240 area, that could be pretty negative for the soybean market. So we're just going out trying to find some cheap strategies to put a decent floor under this thing. We're trying to leave a little bit of upside open, but you're right. The soybean story is a little bit different. We don't have that huge U.S. domestic carryout in soybeans, but we've been arguing for quite a while. The 900-pound gorilla is Brazil,
Mhm.
and if their weather does shape up, we're not going to need to have a huge crop on beans or have a big carryover, because they'll take the bite out of exports, and we'll have to process our own beans here domestically, which, that's the other good story, is the crush capacity that's coming online over the next 12 months. So
Yeah. Yeah, a lot of things to think about there, and a little bit of a different story in beans and corn.
mhm.
You're in the middle of spring wheat country there, North Dakota. Any thoughts in this wheat market in general? I know wheat's just been a bear. It's been tough here, especially on the world stage with all the cheap Russian wheat and more. But any marketing thoughts for wheat here as we're working into the holiday season?
Typically this is the time I would be looking for a rally, especially in spring wheat. You usually see a rally here in November into early December. We have seen basis improve, and we had a big crop in spring wheat here in North Dakota, and it kind of caught a lot of people off guard, because all summer, from farmers, agronomists, you name it, everyone was telling us how terrible this wheat crop was in the state of North Dakota, with the exception of a few pockets kind of down where I am and in southwest North Dakota. And then all of a sudden the crop started coming off in August, and it was not just above expected or better than it was above average in a lot of places, and way above average in some places. And so there was just this huge wheat crop that ended up coming up off the field. It tanked basis out here, and then the a lot. And whenever you have big yields in spring wheat, you tend to have low protein. So not only
Mhm.
was the basis poor, there was a lot of protein discounts for that very average protein wheat they were producing. Farmer wasn't real pleased with the cash price. That basis has started to improve here over the last month or so. Makes it feel like there's some business being done. And if you track the exports, we're shipping some spring wheat out. I think the other story there was just there was a massive winter wheat crop in in Indiana and Illinois, big yields over there as well, and so that's we're struggling. I don't see again, I'm the bearer of bad news. I don't see a huge market rally around the corner. I would, like to see 740 was about as high as we could get there on December spring wheat a few weeks ago. I would like to see it get a little bit higher than that, but it's one of those where I might be lowering my March targets. Getting a little more aggressive, getting some sales here over the next month, because there's just not a lot of powder in that keg to blow this thing higher like people are wanting.
Let's shift over to livestock. Let's talk cattle. Cattle and hogs had a down day on the futures on Tuesday. This cattle market, we had, of course, the October cattle on feed that was bearish. The November report last Friday, I'd say, was neutral to maybe even slightly friendly. What's your thoughts now with these last two cattle on feed reports behind us, nearing the end of the year? I mean, uh, do we feel like this cattle market could get range bound on us here and stay that way, or do we have some upside potential? Or what's your thoughts in cattle overall here, Tyler?
It feels like we kind of gave some of the leverage back to the packer here. The feeder had a lot of leverage, and was able to pass on bids really for the last several months and force the packers' hand. And you heard a lot of cash business being done in the 180, 185, upper 180 levels in the northern plains. Um, for whatever reason, that's cracked. The packer seems to have the leverage again, and they can come in and kind of lowball them. And these feeders they're going ahead and letting them go, which tells you they've got the cattle to sell, and they want to get them gone. That's usually the first thing that pops in my head when they're willing, sellers at lower bids than what they were hoping for. It probably means that they do have some cattle there, and those placement data or the cattle on feed reports have been showing us that. So, I still think the fundamentals of the cattle market stay strong. One of the things I spent a lot of time talking with cow calf producers and backgrounders, so I spent a lot of time focused on the feeder calf market. One major difference between the 2014 going into the 2015 year was last time we saw cattle go up to record highs, and then the big sell off the year following. One big difference is this time, back in 2014, your back month feeder contracts had no premium in them, so they were actually trading lower than where the front month. So January was trading like 233, and the November 24 was down at 230. This go around, we've still got a 23, 24, $25 carry in that market. So that's the market knowing that we have not rectified. We've not held heifers back yet. We're not rebuilding that cow herd. So market knows we're going to stay tight into the next year. But from the hedger standpoint, if we want to wear that hat, don't lose sight of the fact that you can use puts, futures, or LRP to lock in 250 to 255 feeder cattle and in September, October, November of last year or of next year. And last year we were barely able to lock in $200. So I know there's a lot of negativity out there. We've seen a $30 drop in the market, but don't lose sight of the fact that we're $50 higher than we were a year ago.
Yeah, no, I think that is an excellent point. An excellent point. Don't lose sight of where we are at currently compared to last year. Hogs. I look at a hog chart. It doesn't look too great. Hasn't looked too great for quite some time now. Hogs down on the board again on Tuesday. I think this hog market's maybe in kind of a similar situation as cattle, just at lower prices. We're kind of searching for our support level and trying to figure out what exactly it is right here, Tyler.
Yeah, I think the hog market could be explosive. I just don't know which way it will be explosive to. You look at like a Feb chart, it does look like maybe we could be putting in a head and shoulders bottom on that chart, which that would be fairly friendly to hogs. There's some negative news out there. The China hog herd or sow herd is gotten much larger. It's larger than what the country really wants. You've seen some negative economic news out of China, which doesn't bode well for exports of pork. So there's that story, which isn't necessarily positive. The one thing I would say is, as far as futures to cash, we usually carry a little bit bigger premium this time of the year than we are right now. So that could be somewhat bullish to hogs as well. So it's one of those, if you're looking for a spec play or something like that, you might take a position using some type of an option on some hogs. And if you're a producer, probably a good spot to to lay into some puts just in case we do go lower. There's a cold storage report coming out. I can't remember if it's tomorrow or the following Wednesday. Right off the top of my head, I do think that's probably going to be a pretty big driver in the hog market.
Good thoughts. Really appreciate the conversation. And Tyler, I know if folks want to look at all the great intel you guys have at agmarket.net or reach out with a phone call or more, they can find all that information online on your website, can't they?
Yeah, check us out, agmarket.net. And, as a plug, reach out to one of the brokers on there. If you're interested in checking out that video JSA put out, it's well worth the 20 minutes to take a listen to.
Definitely. Agmarket.net. With that, Tyler Shao, thanks for joining us. Have a happy Thanksgiving, my friend, and we will talk to you again soon. Appreciate it.
You too. Take care, Jesse.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.